futures point to a lower open following Wednesday's broad-based sell-off as investors participated in profit-taking and European debt concerns resurfaced. It's a light day for economic data and earnings with just jobless claims and the Challenger report on tap. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with theStreet, and together we bring you the Morning Call Express. It's Thursday, even though it feels like Friday for us due to the shortened week. We've had a really interesting week in terms of trading because we've seen it come back a little bit. Scott, let's review what's happened this week before we get into today's trading plan.
Yeah, well, connecting the dots is very important as a trader and as a market participant. Last week, going into the end of the quarter, I talked about rally under pressure. You know, IBD put us back in market under pressure based on the fact that we were starting to get some choppy downside action and a few distribution days. And early this week we talked about, taking the foot off the throttle, that it's a second quarter, what type of personality we're going to have now that the vested interest of the markups are gone. We could see some type of pullback. And as of yesterday, after yesterday's distribution day, we are now in what's considered correction mode. The question is, what type of correction do we get?
So we have a lot on tap today. We have the jobless claims report and also Challenger job cuts. But what's interesting is you're going to still see some market action even though tomorrow is the holiday because we have the non-farm payroll report coming out, which is not typical because it's a bank holiday. I think there's only 2 times before since we've been recording it that we've seen it like that.
Yeah, so traders have to figure out what to do. And for me, I've been light, I've been a little bit short. Today with the futures down, I'm going to show you in the chart. I'm going to cover my shorts, maybe put on a cute, few longs because we're I think negative 51 on the McClellan oscillator, which sometimes does produce an oversold bounce. So if you look here at the S&P, you will see, here are the trends, guys. This is what's very important. Here's the macro trend that we haven't even tested, and then the 2 other trends. Here's your intermediate trend, okay, that comes right back right into where we are. Obviously this momentum trend got broken. This is why I got rid of a lot of my longs, a lot of my portfolio approach type of scenarios. So here we are coming into this floor. This floor stands at 1386 to 1388. Last time we came into this trend line, we bounced. That was at 1340. So right here, if you've been short for the past few days, I would say cover into this area because we could see some type of flattening out ahead of those jobs numbers tomorrow.
Moving along to our sector spotlight, we're going to talk about high beta tech. We've done really well trading this at the beginning of the year. If you haven't noticed, Apple's been up 50%, so clearly that's lended some support. But Scott, since we're talking about the SPX in our trading plan, let's also take a look at the Qs because it's just had monster performance this quarter. Yes,
and the Qs is where the leadership spins, so you want to see what goes on here. So if you take a quick look at the Qs, you'll see yesterday it breached a high level zone. No big deal for the macro investor, but for a trader, here was that doji or that inside day, not actually inside day, outside day that we spoke about when it tried to break through the highs and didn't. We set a nice spot to take some profits. Yesterday, we broke this little floor, came off this trend line, but I do think we might be able to get below this low here at some point and test this bigger support area, which comes in around 66.46. And as you said, if you look into tech, you have to look at Apple because Apple is what led us off the lows again yesterday. Still holds in well. It was off the lows. I'm going to actually try and trade a long versus yesterday's low of 617. You have the 10-day moving average of support right below it. And it got another upgrade today, I think, by Jeffries this time to, what, 700?
Yeah, I mean, we saw 2 price targets up this week to 1,001, 1 to 1,000. There's only one negative broker on the street that thinks that it should be trading around the 550-ish level over at BGC. Moving along to the trenches, we're going to go into my favorite spot, the ags. We still expect some choppiness Q1, Q2, but this is really the back half story as potash fundamentals improve. Monsanto was out yesterday with earnings, blew it away, 22% on EPS.
Yeah, well, the stock tried to be positive, but the market really pressured it. If you look at the chart real quickly of Monsanto, you will see that it looks okay, doesn't look great, but at this particular point, it tried to break out and couldn't. I think as long as it stays above 76 to 78, it looks fine. My favorite name in this space is CF. CF, to me, is acting very well at the upper end of the range. If this could finally get above 190, 191, this could help lead that group, so look at that for leadership.
Okay, we'll come back to Scott and the rest of the team at the end of the day as they recap the charts for us on options, profits, real money, and T3Live.com.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.